Okay, this is timing strategies for Wednesday, July the 30th. This is a client blog update. It's not a recommendation to buy or sell anything or take any action. We discourage piggybacking because these are not updated on a regular basis. If you have any questions, if you're not a client or if you are a client and you have any questions, please feel free to give us a call or send us an email. Again, this is not a recommendation to buy or sell or take any action. That said, what do we do today? Well, we bought a little something, not in the market. We're still hedged in one of the in one of the accounts. In our long only account, we're straight long, but we bought today. Regrettably, this market's not behaving the way I'm anticipating, and that happens about half the time. So, that's kind of how it goes. So you got to do what you get, not what you want. We were short from this day using the IWM or the Ridex short small cap fund from this day back last week on the 22nd. Started to work out real good. I was looking for a close or basically a test to this level a little deeper, somewhere down in this 68 level on the IWM or the small caps before we started covering those shorts and thinking about getting long. I've been looking at getting long right at around on the S&P. Well, we didn't do that. We still have the short. We still have the short on in the Russell from that day, which is about a break even. Today we went long though with the oil and energies and the material stocks, using the XLE as a proxy and the Ridex Energy Services. Not the setup I'm looking for, but you got to take again what you get. I was actually looking more for the $69 price tag to get long. We only went long 10% in the energies and energy services using the Ridex funds. And we also went long with the material stocks. We'll use the XLB as their proxy as of that day today. A little different setup there. It's not as volatile, but at least not either way so far. So again, where are we? We're also short with the long short accounts in the Russell 2000 from this point, which is about a break even at this point on the Russell for our hedge. We're long the GDX or the Ridex Precious Metals Fund. We've been long that since here, 10%, so that's given us about a 0.25% drawdown using a 10% allocation. Again, we took profits back up here in the high bar range of the $50 price tag. We were looking to get long a little more on the precious metals based on today's pattern and setup. We may get long more, but that remains to be seen. I'm looking for a little different kind of a setup. I don't want to get too aggressive in that precious metals fund because my real buy target on the precious metals fund is actually down in this level from 42, where we tested again, actually for a third and a fourth time if you go all the way back. We've tested that level several times. I was looking for that thing to break down today, come back down to about the $38 price tag. And at that point, I'd be real comfortable getting long. Maybe 20 to 30% in the precious metals. But be that as it may, we didn't get it. We got to take what we get. So we're still long the metals. Just got long the energies. And now let's take a look at the Qs, because therein suspicion lies. You look for the last month, we've basically gone flip-flop, ranged, open-close, switch back and forth. I'm of the opinion, which is basically meaningless in an opinion, is that we're going to break that range. And I think we're going to break it to the downside. Obviously we're going to break it. And that's just an inevitability. And as a matter of when and how and where it goes, what time, really where you get paid is to kind of be ahead of that break and make some money on it. My estimation is that we're going to break it to the downside. We're going to come at least to wash out these lows. The fact that the NASDAQ wasn't as weak on the way down that we saw back in, from May till basically July, it wasn't as weak on the way down compared to the Dow. Now we're not getting the same kind of strength out of the NASDAQ versus the Dow or the S&P. My estimation is, for now, either obviously one of three things are going to happen. It's going to go up, it's going to go down, or it's going to go sideways to nowhere. My first estimation is that we might test the top of that range a little bit on the S&P. Let me go back to the SPY. That we're going to test the top of that range, maybe as high as 1305 on the cash or 130.50 on the spiders. and then come right back down into this level. Because again, you can see that for the last month, we've basically gone flip-flop nowhere. And this makes it very difficult. So my estimation is that we might get a little bit of a spring to the highs, and from there we might come back down and test this low, or test this range at least at the 126 level. But that said, we are above, for the second time, the March lows, and the volume is starting to come in on the indices and also the breadths, the breadth and all that. So if anything, we're going to have to be more leaning towards more of a long bias portfolio. And how we're going to trade that, how we're going to get in on that, if that's the case, if that's what we do, well, that remains to be seen. But I was actually looking for my own personal opinion, which I'm starting to lose the confidence in. I was actually looking for more of a test lower, at least back down into the range down here of about 122 to maybe even as deep as 1175 on the S&P cash, and then head back up. Well, we didn't get that. It was a shallow test, more or less, and now we're back where we are. So this makes it a little difficult for me to make any kind of estimations going forward as comments and what to do. So be that as it may, we're long in our long-only portfolios with the metals and the energy and the gold. We're long that same percentage in our long-short accounts with the hedge still on from the 27th, or excuse me, the 22nd. Try to give you a little more update and information as it comes along as we change our positions and our allocations. Again, if you have any questions, please feel free to give us a call or an email. And right now, my best estimate is that we're going to range somewhere in this level for the most part. We could get the breakout. The breakout, in my opinion, might fail. It should fail. Just how high is it going to go before it fails? That'll be the test. And if it goes too high, too far, too fast, meaning if we break out and we get back above that 1305 level up to maybe 1320, 1340, that's what we'll probably look to put on another short position. So please feel free to give us a call or anything else, and I wish you all the best.